Hello there, welcome to this edition of Global Business Africa. In the next 30 minutes, we'll give you a speed run through all the key business news stories that are making your headlines across the African continent. From Cairo to Lagos, Nairobi and Johannesburg, we've got you covered. Here's what's coming up. Egypt and Ethiopian officials meet over the Grand Renaissance Dam. We'll have the details as well as concerns from Cairo, Addis Ababa and worried farmers up north. South Africa's power woes do continue to ramp up. We'll be live in South Africa with the latest developments. Let's begin tonight in Egypt, where the country's main producer of cakes and biscuits, Bisco Misr, has received a $118.9 million offer from Abraj Investment Management. The idea here is to take a 100% stake in its business. Now, Abraj's offer was lower than Bisco Misr's closing price of 79.8 Egyptian pounds on Sunday, at just 73.91 pounds a share. Egypt's Financial Supervisory Authority, the FSA, is considering the offer. Abraj Investment Management is an affiliate of UAE's Abraj Capital. That's the Middle East's biggest private equity firm. It first made an approach to buy at least 51% of Bisco Misr in July, pending due diligence, which the confectionery maker now says has been completed. Now, shareholders holding 56% of the snack maker have agreed to sell to Abraj, provided that the formal offer comes back by the end of the week. Dubai-based Abraj Capital has been pushing to expand into emerging markets. Bisco Misr owns baking facilities in Cairo and in Alexandria. Still in the North African state, Telkom Egypt is reportedly planning to hire financial advisors for the expected sale of a 45% stake in Vodafone's local unit. Now, it's understood that the fixed line incumbent has sent requests for proposals to both local and international banks with a view to valuing Vodafone Egypt's stake. Now, these financial institutions are also expected to help identify potential buyers. The monopoly phone company is majority owned by the government, and it has been given until December 2015 to divest from Vodafone Egypt as part of approval for the country's new unified licensing regime. This will allow the fixed line operator to enter the mobile service sector on its own. Telkom Egypt shares have fallen 7.2% so far this year. That's well below the broader benchmark that's gone up by about 30% or so in the same period. Now, senior Egyptian and Ethiopian officials have met in the Ethiopian capital, Addis Ababa, for another round of talks concerning the Grand Ethiopian Renaissance Dam. Egypt's Foreign Affairs Minister Sameh Shoukry met his Ethiopian counterpart, Tedros Adhanom, in the Ethiopian capital on Sunday. Egypt has been increasingly concerned over the construction of the dam, which Ethiopia started diverting water to build in 2012. It insists Ethiopia has to honor its pledge to not harm Egypt's water security. As CCTV's Girum Chala reports from Addis, however, the project now 40% complete and due to be operational next year. All parties are looking for a middle ground.
A high-level meeting designed to show the world relations between Africa's oldest nations are getting better.
We firmly believe a close working relationship at all levels and in all areas is beneficial both for our bilateral cooperation as well as in regional and international areas.
The Ethiopian and Egyptian people will continue to extract the benefit and feel the importance of this relationship in their mutual aspirations for development and for greater cohesion.
The two countries have been in dispute over Ethiopia's Grand Renaissance Dam. Egypt fears the dam will cut its supply of water from the Nile. The two countries and Sudan have referred the matter to independent consultations. Ethiopian analysts say there are benefits to all three countries from the power the dam can supply.
Grand Renaissance Dam is designed in such a way to meet not only national supply demand long-term objective, but to contribute to renewable energy supply to the regional, really critical energy, especially renewable energy demand. So within this package, the beneficiaries will be the northern continent part and also the eastern continent part and the southern continent part.
The two countries have signed 5 agreements covering areas such as education, health and trade. And more high-level meetings are likely in coming months. Ethiopia's Prime Minister Haile Mariam Desalegn is expected to host Egyptian President Abdel Fattah al-Sisi. Grumjala, CCTV, Addis Ababa, Ethiopia.
Now, over in Egypt, the construction of the Grand Renaissance Dam in Ethiopia is causing ripples among farmers just outside Cairo. In their opinion, building that dam will bring a slow death to their livelihoods. Some economic experts even claim that Egypt could lose up to a quarter of its water supply once this $4 billion, 6-gigawatt dam is complete.
The construction of what is deemed as Africa's largest hydroelectric dam on the Blue Nile River in Ethiopia is ruffling feathers in downstream Egypt. Egyptians are concerned the Grand Renaissance Dam will affect water flows to Nile-dependent Egypt. Mohammed Touk is a self-employed farmer who rents 2 acres of land in Giza province.
To reduce the water flow is like killing us. This will kill the crops and the humans as well. Reducing the water is like a slow death.
Other farmers in the area share his concerns.
If there are no water supplies, that means no agriculture. This dam will cause a lot of damage to Egypt. It is still under construction, and by the time of the creation of the water reservoir to fill the dam, Egypt will die.
We are planting wheat crop, and if there's not enough water supply, Egypt will have to import wheat.
Egypt, Sudan and Ethiopia all make use of the vast Nile River for drinking water and agriculture. But Ethiopia also wants to harness the river's power to generate electricity by building the dam, and tensions have risen over the project. Egypt and Sudan say the dam could affect access to water in both countries. Egypt reportedly fears that the dam will diminish its share of the Nile, which provides almost all of the desert nation's water needs. The dam is expected to have a reservoir of about 70 billion cubic meters, or just about 240 billion cubic feet, which is scheduled to start filling next year. 85% of Nile water originates in Ethiopia. The country suffers from frequent power cuts, which it hopes will be solved by the dam that will have the capacity to produce 6,000 megawatts of electricity. African economic expert Mustafa Al-Sheikh has been studying what the likely effects of the dam's construction will be for Egypt.
The country's current share already is insufficient for all the current agriculture and development needs, especially because development in Egypt is on the rise and also the Egyptian population is growing in the last 10 years. So basically, Egypt's water share should be more than what we are currently getting.
When built, the dam will form Africa's biggest hydroelectric power station at a cost of $4.2 billion. But the cost could be even greater for Egyptian farmers if Al-Sheikh's projected water shortages turn out to be accurate.
The Ethiopians are saying that they have already constructed 40% of the dam, and until now, we didn't feel any shortage in our water share. However, it's expected that Egypt will lose 20 to 25% of its annual share.
The latest round of talks between Egypt and Ethiopia are on in Addis Ababa on the 4th round of the joint Egyptian-Ethiopian Ministerial Committee. Penina Karibe, CCTV.
Let's head over to the opposite end of the African continent to talk about Telkom South Africa. It's cut its half-year earnings forecast by 70%, citing costs related to its restructuring process. Its shares, however, went up. Analysts argue that the underlying business as a whole really is doing well, and this is just a one-off blip. The firm expects earnings to fall by over 4 Rand per share for the 6 months ending September the 30th. The fixed line operator set aside about $21 million for retrenchment, voluntary severance and retirement package deal. Telkom says without those charges, its earnings would actually have been 20% higher. The telecoms provider has been trying to trim a management layer of about 2,650 managerial posts in order to lower costs over the next 5 years. That said, the firm has not indicated exactly how many positions will be culled. Now, South Africa's persistent power problems took a turn for the worse over the weekend when a coal storage silo at the 3.6 gigawatt Majuba power plant cracked and collapsed. The power station is the youngest Eskom owns. It provides about 10% of the country's power supplies. Since the collapse, only one of its 6 power units has been operating, and output has dropped by 83% to just 600 megawatts. Eskom says the accident has led to more power outages across the country and new load shedding schedules. Just last week, the firm had warned that power supplies were severely constrained and would remain so due to technical problems. Managing this crisis was Eskom's new CEO's first encounter with the media.
I had this idea that I will engage with members of the media on more calmer, more positive circumstances, as it were. But as I say, you know, every dog has its day. This is, if you like, my baptism of fire.
We find that our major customers are generally very cooperative on that, and so the response is yes. It depends on the timing that we have. If it is over peak, we will typically not ask the major customers. If it is right through the day, we'll give them the advance notification, and they generally will do that.
Let's get you some more details on what's going on in South Africa now. CCTV's Angelo Coppola reports there are fears that this latest incident may force Eskom to implement a longer-term rationing program across the country.
Power station provides around 10% of the country's electricity, and when the silo collapsed on Saturday, it introduced national rolling blackouts in an attempt to keep the grid running. On Sunday, cities across the country suffered from several hours of no power, while Eskom teams brought truckloads of coal into Majuba to get the second power unit up and running. It still hadn't got the remaining 4 units up and running yet. Despite this, Eskom said early on Monday that there would be no load shedding on the first day of the week, provided no other unplanned failures occurred.
The key for our members, as it is with Eskom, is communication with your customers and your counterparties. If you communicate effectively and you keep those channels open, then response mechanisms can be that much better.
Small businesses don't have the benefit of a dedicated Eskom manager looking after their concerns and interests. In many instances, they don't get advance warning of a power cut, as the municipal load shedding schedules are not posted or are wrong.
In many of these municipalities, they're literally having to send people out in bakkies to do manual switching, to turn people off and then 2 hours later or 3 hours or 4 hours later go and turn them back on. And that does mean that it is very difficult for them to adhere 100% to those schedules.
Business owners like to plan for every eventuality. However, sometimes budgets are also constrained.
Businesses do not have the capacity, cannot afford to access such facilities, especially if one looks at the small business environment. And certainly even if they could buy the hardware, you have to support that hardware with a diesel supply, and that is also a fairly expensive option.
In terms of the big power users, the Chamber of Mines reports that its members haven't been affected by the load shedding of last week. They are on alert if load shedding does take place this week. While Eskom was quick to announce that there'd be no national load shedding or rolling blackouts during this week, they have come to rely more and more on solar and wind power to feed the grid. Unfortunately, however, when there's no sunshine or wind, then the grid gets placed under more pressure. And as we know, anything that can happen generally does. I'm Angelo Coppola for CCTV in Johannesburg.
And that's exactly the city where Angelo Coppola joins us now live from with some more data on South Africa's current power crisis. Angelo, how soon can the Majuba Power Station be back up to full operating capacity of 3.6 gigawatts from the 600 or so it's putting into the grid right now?
Well, currently there are 1,200 megawatts going into that into the grid because the second unit was brought on earlier this afternoon. And Eskom tells me that units 5 and 6, which are on the other side of the power station, excuse me, should be up and running by Wednesday, but they're not making any promises. The issue really is around unit number 3, and that's in the middle where that silo collapsed. And they're busy clearing the rubble away, and we're understanding now that the conveyor belt that feeds that number 3 unit is probably also damaged. So that's going to be a while before that's brought back online. We were also told that unit number 4 is in a planned maintenance shutdown phase. So full capacity from Majuba is some time away. Rahman?
Indeed. The Chamber of Commerce in South Africa argued earlier today that manufacturing firms are going to be hit hard by this latest round of load shedding, especially given the fact that they had a strike in the start, rather, the second half of the year. How are firms in that sector going to deal with this supply shortage?
Well, Raman, the bigger, larger firms aren't really at risk here because many of them have bought in power units or diesel power units that they've had in place since 2008. So they have the diesel power generators running there. They've also had a little bit of a respite recently because the diesel prices have come down by around 50 cents. That's 50 South African cents. But it's still expensive, and generators also need to be serviced. These costs can't be passed on to consumers. The problem, however, is in the smaller businesses. They don't have excess capital to invest, and they remain at risk. Many of them can't afford the equipment or the running costs. Raman?
Indeed. Finally, Angelo, between these power problems and the decline in gold prices, we're down to about 4-year lows early in trading today, how are bullion producers going to cope?
Well, up until now, they haven't been load shed, according to the Chamber of Mines when I spoke to them earlier today. The members have been asked, or the big power producers were last week asked to cut back by some 10%. And in those big power producers or users are the mines. Eskom said to us yesterday, as you heard a little while ago, that if the system comes back under pressure, they will go back to the big industrial users and ask them to cut by another 10%. But as it stands right now, they're not going to be cut. Of course, they could close shafts, which is an option, and they could retrench people, but we aren't hearing any of that talk at the moment.
Yes,
and then
indeed.
in what is said to be an unrelated development, we heard on Friday that Harmony Gold had announced last week that they plan to close their Kusasalethu mine for 2 weeks, ostensibly because of illegal mining activity. And it seems that they want to beef up security and boot out the Zamazamas that have been mining there. Purportedly, it's going to cost them around $10 million in lost production. I have to say that this is the first time I've heard of a mine closure for any period for this reason. Raman?
Indeed. We'll have to leave it there for the time being. That's Angelo Coppola in Johannesburg, South Africa. Power problems, of course, being a recurring issue all the way back from about 2007. Let's make a quick run through equity markets here for you. Mixed bag across the board. Positive numbers coming out of South Africa and Egypt, negative ones in Nigeria and the NSE 20 over in Kenya. Some interesting news, however, from South Africa. One of the retailers down there, Massmart, has filed a competition complaint against 2 other retailers, Shoprite and Pick n Pay. The argument being that, in their opinion, having exclusive leases on shopping property is anti-competitive. Sounds like a case to watch. When Global Business returns, we'll be taking you to banks in Uganda, which are cashing in on growing trade volumes in China and sidestepping the dollar entirely. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
This is the first year that Africa will have more foreign direct investment than aid. And it's like the tipping point in terms of changing the way the continent is perceived. And I think this summit very much responds to that call. Now, whether it can materialize what is being announced is something that we'll have to check and see whether it happens.
Welcome back to the program. You're watching Global Business Africa. Let's take you to East Africa. Trade volumes between Uganda and China have been growing strongly over the years. Of course, a wider continuation of the narrative between sub-Saharan African trade with China. As a result, however, some commercial banks in Uganda have now started to actually carry out transactions in the yuan. cutting out the dollar entirely. In What's Hot Tonight, CCTV's Michael Baleke examines how some banks are staying ahead of the curve.
China is Uganda's main trading partner, with trade volumes between the two countries close to $600 million annually. This is more than a six-fold increase since 2005. This surge in trade means commercial banks like Stanbic Uganda are providing solutions for customers to make and receive payments in Chinese yuan.
So what this solution does, that gives the ability to trade from your currency, Uganda shilling, straight into Chinese yuan without having to go into a third currency. It also gives you opportunities to, to get greater transparency in the pricing, because you don't have to price through a third currency.
Previously, Ugandans doing business with China had to convert Ugandan shillings into dollars, then finally into yuan. This would come with hefty transaction fees. The increased demand for the yuan in Uganda can be attributed to a surge in Chinese companies in the country, as well as the need to give support to the local business community in order to avoid exchange rate losses. The bank says this initiative will provide quick, convenient and flexible solutions for carrying out transactions between the two trading partners.
There is always a currency exposure because you're moving from one currency to another. And what happens is, because of the volatilities of the exchange, different exchange rates, always when you're doing that sort of transaction, you run that currency risk. And it can be costly at times.
This service will target Chinese, locals and multinational companies. Stanbic Uganda says it is the right time for businesses to position themselves to tap into Chinese projects that range from energy, infrastructure and manufacturing happening in Uganda.
We want to give them the ability to buy cash notes, so you can carry Chinese cash notes into mainland China. We want to give them the ability to open up transactional accounts, current or savings accounts. We want to do trade services with them, so we'll write a letter of credit, we'll write a guarantee, we'll do performance bonds, we'll do bid bonds in Chinese yuan, denominated in Chinese yuan.
Settling transactions in yuan is especially facilitated by the fact that Stanbic Uganda's parent company, Standard Bank of South Africa, is at least 20% owned by the Industrial and Commercial Bank of China. This has seen the creation of a partnership and synergy, which means that more foreign businesses can now pay their Chinese suppliers in yuan and thus eliminate foreign exchange rate risks in the future. Michael Baleke, CCTV, Kampala.
Let's make a quick run through commodity prices here for you. US dollar strength really is the main driving story here behind the prices that you're seeing now. Crude oil, of course, having some fundamental supply and demand issues at play as well, but gold down well under $1,200 per ounce. It should be interesting to see how this will affect bullion producers in South Africa and elsewhere across the continent as well. We're taking a short break here on Global Business Africa. We'll be back in 60. Welcome back to the program. Nigeria's super rich, pretty much like their equivalents across Africa, no strangers to the idea of conspicuous consumption. For some, however, there's no better way to flaunt your wealth than with a car that stands out. And that doesn't mean rushing to the Porsche dealership and getting a 911. For the more demanding clients, there's a body shop in Lagos that will promise you an eye-popping transformation for even the most run-down, ordinary car. Filua Pimp My Ride, as it's known, was started by Rashid Filua Omolulu, based on inspiration from the popular MTV series of a similar name. Celestine Carone takes up the story on Grassroots Tonight.
Entrepreneur Rashid Filua Omolulu does what he likes best, transforming cars by pimping them according to customers' taste and preference.
You see the inside. It's still empty, that we are changing it to Cintillon. We already do the painting, and then the interior, and then the dashboard to the same color that the vehicle have carried. And then in the inside down, if you look at inside now, it's empty. So We are doing the sitting room that we have TV, flat screen TV, and then fridge, DVD, and then camera reverse.
The oil wealth of Africa's biggest producer has made multimillionaires of its elite in the past few decades, and the middle class make up around 23% of the population, according to a recent study. Incidentally, majority of the growing middle class do not mind splashing their money on expensive cars. But when Filua first introduced the idea here in 2007, his clients couldn't visualize the end product until he first pimped his own car.
When I started, people look at it, how somebody will turn car to another, reshape another to another shape, from BM to Mercedes, or inside the motor you can sit down comfortable, watch TV. So, and then when people are looking my own car, I use my own car started. But when people they are look at it, and then America people my ride assist me in this country so much. Because when some people they are watching America pimping my ride, they are watching Filua pimping my ride in Nigeria, and then people started love to pimp their own car.
Filua was trained as a mechanic in Holland and Germany. He also worked in countries like Saudi Arabia, Sudan, Egypt and Malaysia before he finally set up shop in Nigeria. But even with his expertise and a solid business plan, he says getting capital to start the business was tough. With an initial investment of around $24,000, his business is now worth over $3 million.
Before I started my own company, I first of all have a contract with Kosharis Motor from Germany. So then I used that 1 year to study how Nigeria business will pay me. And then before I started, and then I faced a challenge before I can get money, before I get capital to start it. I sold my car. I sold my land, most of my property I sold before I can become, because bank didn't want to borrow. And then nobody wants to assist in this country.
Filua's services carry a hefty price tag. Clients pay a minimum of around $5,700 depending on the level of design and customization. The garage works on a maximum of 10 cars monthly, and all the car spare parts and paints are imported directly from Europe. Celestine Caronay, CCTV.
Quick run through the currencies here for you. Perhaps it's fitting that we actually focus on Nigeria. The Naira slipped about 166 to the dollar in trading today. Fairly tight demand-supply metrics on the US dollar as far as dollar supply is concerned. It did, however, recover intraday to about 165.60-65, give or take. We'll keep tabs on this moving forward, especially on the currency of Africa's biggest crude producer. Now, here's what we're working on for tomorrow's show. East and Central Africa's most profitable company, Safaricom, will be releasing its financial data for the 6 months ending in September. We'll have the details, and of course, Bob Collymore, the CEO, will be on set with us as well. And permanent secretaries in charge of the East African community are meeting in Nairobi. They're going to be talking about ways and means of easing trade between all 5 countries, settling matters of concern to all traders on the side of the continent. That's it for this edition of the program today. Please send your feedback to globalbusinessafrica@cctv.com. And remember, we're offline. The news continues on Facebook and on Twitter. We'll see you over there. Thank you so much for watching. See you in the next 23 hours. I'm Ramanya.